Well, good evening and welcome to another edition of Capital Market Live on Channels Television, where the market speaks and we analyze. I'm Ladi Williams. So, trading month of May, that's over now, and we're heading into June, the final month of the second quarter. Let's try and follow the money. But first, a recap of major indexes that we track. We see for European markets, they closed the week on a positive note as investor sentiment improved on renewed hopes of a ceasefire extension between the United States and Iran. The prospects of easing geopolitical tensions that helped, lift major indices, including the Stock 600, Germany's DAX and UK's FTSE, while falling oil prices that boosted travel and airline stocks. Markets also found support from expectations that a more stable Middle East could reduce inflation pressures and improve the outlook for global growth. Then flip over to Asia now. I would say Asian markets ended the week on a mixed note as investors weighed easing tensions in the Middle East against fresh concerns over global trade and economic growth. I would see for Japan's Nikkei and South Korea's Kospi, the posted gains supported by technology and semiconductor stocks, while Hong Kong's Hang Seng index that traded lower amid cautious sentiment. Investors also, closely watching developments around a potential U.S.-Iran agreement, with falling oil prices helping to improve risk appetite across regional markets in Asia. And it's the same picture. Wall Street closed higher as investors pushed major U.S. indexes to fresh record levels, buoyed by optimism, and it's still around U.S.-Iran agreements there. We see technology stocks also gained. The S&P 500 and NASDAQ extended their rally, while easing bond yields and strong corporate earnings helped the sentiment there. However, investors remain cautious as inflation pressures persist and markets continue to monitor developments in energy prices and the Federal Reserve policy. And talking about energy prices, let's get a track on commodities now. For the week, they closed on a mixed note as precious metals showed resilience, while crude oil prices recorded sharp declines. Gold edged higher about 0.65% to close at $4,537 per ounce, while silver slipped slightly by 0.25%. In the energy market, Brent crude that fell more than 9% to $91 per barrel, with WTI also down about 9.53% to settle at $87.75 per barrel, reflecting renewed pressure across global markets. So definitely that was a picture right there for commodities. That's the metals market and oil on the oil market. All right, so let's get a check now on how the stock market performed. We see it closed the week and month on a mixed but resilient note as investors continue to assess market valuations and profit-taking activities across key sectors. The NGX all-share index gained 3% in May, extending the market's positive momentum despite slowing from April's sharp 20.36% rally. On a weekly basis, though, however, the market dipped slightly by 0.10% as cautious trading and portfolio rebalancing weighed on sentiment. So analysts say strong liquidity, the banking sector interest, improving investor confidence continue to provide some support for major equities. All right, let's discuss the latest headlines in Nigeria's stock markets, the economy. We see President Tinubu's presidency that clocked 3 years this May, and most of us are taking stock, so far. Also, we see First Holdco shareholders approved 253 billion naira capital raise. Joining me to unpack this and other matters in the market, we have Favor Teogbade, is a portfolio manager at Chapel Hill Dynamo, and he joins me right here in the studio. It's great to have you.
Thank you so much.
Good evening. And, definitely, I'm not sure if you're an Arsenal fan, but I think I have my ears to the ground with what's happening with that match. Yeah. But you're not an Arsenal fan, are you?
No, I am not. I am a Liverpool fan.
You're a Liverpool fan? Yeah. I'm a Man U fan. But at this point, I feel I'm rooting
for Arsenal.
For Arsenal somehow.
Same here.
But let's see. And first off, let's kick off. President Tinubu clocks 3 with his presidency. And if we're taking stock with the stock market now, all-share index, May 2023, started off 55,769 points. May 2026, that's the last close, 249,484 points, 347% up. since he assumed office. Market capitalization started off at 30 trillion. Now, 159.9 trillion naira, 426.33% advance. So I guess the bulls, I guess it's been tagged Tinubu. Tinubu. Why were they so bullish, in this market?
Yeah, to be honest, I think from three different standpoints. The first is when he came into the office, one of the first things he did was to float the naira. So from an FX standpoint, that sort of gave the FPIs, foreign portfolio investors, some level of confidence, right? Because they are then able to price the naira correctly. So I think that FX unification was one of the things that has helped, inflows into the country, because FPIs now have more confidence. Number two, for the very first time in 18 years, the Investment and Security Act was then also, worked on. So that also then affected quite a number of things. Now the SEC is able to also then properly regulate people, firms managing digital assets. And you know that digital asset firms, people into crypto and the likes, also sort of have a high level of participation in the capital market. For example, also look at the reforms that the government has actually done. For example, there's been a lot of recapitalization going on in the financial services industry, from the pension industry, the insurance industry, and the banking industry. So, for example, if you are going to be specific on the banks were able to raise additional capital of about almost 5 trillion naira. That is very solid. So that kind of inflow pumping into the system is definitely going to boost what is going on in the market.
Right, and I guess we have elections coming up. This is a pre-election year, and I'm wondering, what do bulls do with this kind of year, a year before the elections?
The elections.
Seeing how far we've come already in this market.
Well, to be honest, I guess...
What's the play for investors this time?
So I guess, part of investment strategy is also your ability to wait, right? Not taking any investment action is in itself an investment decision, right? So there are times where you just have to be patient and watch the market ride, and follow the flow. So what I'm trying to say in essence is investors need to be cautious, right? Seeing that the market has done in excess of 60% already this year. I personally believe that H2 might not be as, rewarding as H1 has been. Not that it's going to close negatively, but I do not see us, doing another 60-something% in H2, my opinion, right? So I feel that investors need to actually have a cautious sentiment as we run through this period.
Right, and talking about caution so far, looking at the trading month of May, we're up 3.0%. That's for the trading month of May, from a previous 20.36% advance. That's for the month of April. If you can put that up, then we have a 3.0% from 20.36% in April. So it's a huge slowdown, compared to the trading month of April. Then obviously we come to the weekly performance. It's down 0.10% for the last trading week of May, which was a holiday, shortened week. So looking at this trading month, I did talk about this before. It seems investors sold in May and went away.
Yeah, so I think one of the things that make a market healthy is your ability to actually crystallize your profit. So beyond just having paper profit, there are times where investors will also then come to the market to take some cash off the table, which is what we are seeing. And it speaks to the fact that the Nigerian equity market is a healthy market. So at some point, we are going to see profit-taking activities happening, right, which could sort of, affect the trading, volumes, right, in the market, because you do not then see a lot of people coming into the market to buy, right? You see people selling down and all of that. So there might be a slowdown, majorly because of profit-taking activities, which was very evident in the month of May. Right,
and also in this final trading week, we're up higher than 3%, about 3.something%, but this pullback now is smack on 3% for this month. Which sectors would you say stood out for you in May?
To be honest, I think the industrial sector led the pack in excess of 8%, largely on the back of expansion story, capacity building stories that we've heard with players like Danksem, WAPCO, Boa Cement. These guys are, working on expanding their capacity. And then there's also a story around Danksem having a dual listing, on the London Stock Exchange, which was also part of what affected investor sentiment because the stock itself did about 20-25% in the month of May alone, right? So industrial goods, and of course, industrial sector, and of course the banking sector. The banking sector also did quite well. So, for example, the likes of GT, Zenith, First Oldco, also did very well, largely because of their earnings result. So people are very, 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 positive that these banks will continue to do very well.
Yeah, and talking about the banks, we did see some moves with First Holdco. Yeah. They're targeting that 1 trillion level, and we'll see the shareholders actually approving, to this capital raise. What are you seeing there?
To be honest, I think this is beyond regulatory compliance. I feel First Oldco is trying to make a statement, right, which is very positive from my view. 2 or 3 things I feel is going to actually give them some level of buffer because this is going to take them beyond the 500 billion requirement. So having about additional 500 billion, it's really, really a lot, from the regulatory cap. So this is going to give them a level of buffer against, non-performing loans, against, naira devaluation and some of these FX exposures that they may have. Number 2, from a growth standpoint, you would then see, because CBN technically, benchmarks banks against their lending power against their capital strength, right? So if they're able to hit that target, I feel that they're going to have a stronger balance sheet, and on the strength of that, they're going to be able to issue out more loans, right, and also pump funds into infrastructure and some of these other sectors, and I feel that that is going to be earnings accretive to them, right, as we are going to see fees go up, their income go up, which is going to affect their top line. And I think lastly, there might be some level of dilution. We shouldn't shy away from that fact because there might be some level of dilution, but then I feel that the EPS is still going to be strong. So I feel that from a short-term perspective, that dilution might impact, but over a medium to long term, the investors would definitely be happy for staying in that stock. Right,
and we'll definitely be watching moves ahead of this capital raise.
Absolutely.
I'll be paying attention to all of that. So yeah, so we're going into another trading month, the last one for Q2. That's June. And I'm wondering, what is the strategy this time? After selling in May and going away with a 3% gain, even though it's still positive, it's not negative, for May, but, compared to the previous month. So what's the play for June?
So I think for portfolio managers and investors at large, I feel that what we should be doing now is to be targeting fundamentally strong stocks, right? Stocks that have high, sound fundamentals, beyond the noise, beyond the momentum, beyond what people are saying, the sentiment. We must be focused. We must not, make irrational decisions based on noise or what people are saying. We have to be very focused on targeting fundamentally strong stocks, 1. Number 2, we must stay, or we should stay in large liquid stocks, because when you enter phases like this, right, there is, the fear of missing out that then comes to play, where people are then scared of, missing out on a lot of things. You then see people trying to sell when they shouldn't actually sell, or see people buying when they shouldn't actually buy. So it's important that at this point you stay in large liquid names, such that you have the capacity of being able to track the level of volatility that these stocks are actually going to have in the month of June. I think we should also be careful and cautious around, because profit taking is going to persist, in my opinion. I feel some people are still going to come into the market to take some money off the table. So we should also be cautious in this month of June. And lastly, let's stay off illiquid stocks, right? Because most of the time, people think penny stocks are cheap, right? The fact that a stock is cheap in price does not mean it is cheap in valuation. They are two different things. So you can actually be buying a stock at a very cheap price, but at an overvalued, position, which is actually going to get a lot of people's fingers burnt.
Right. I'm talking about price. I'm going to pick your brain after this break on the Dangote refinery IPO.
Absolutely.
What price we're going to be looking at? We're going to visit that right after this quick break. Just stay with us. Welcome back to watching Capital Market Live on Channels Television. And yes, we're unpacking what played out in the month of May and what to look out for in the month of June. I still have with me here Favor Teobade is the portfolio manager at Chapel Hill Denham. He's still with me right here in the studio. Though my mind is still on that match. I don't know what's happening right now. Maybe my director will update me on the scores. But yeah, before we went to break, we did talk about the Dangote refinery. What we're expecting for that IPO. Word on the street. I did hear double, like 15 to 20,000 naira, per share. I don't know. I'm just putting that out there. What do you think could be? Because you were talking about penny stocks there. Not all penny stocks are cheap.
Absolutely.
Right.
Absolutely. So I think based on what we've heard, it's been valued somewhat around $50 billion, right? I think the cost in the real sense, based on what was published, was around $20 billion for the refinery. But the current valuation is somewhat around $50 billion, dollars, based on what we've heard. So if you then look at that and the current market cap for the entire Nigerian equities market, which is around, if I'm correct, slightly above $100 billion, right? It means that the size, right, if you are going to list like 10% of that, that means that Dangote refinery is going to be around 15–20% of the entire market cap, right? So it's really going to shift the equities market in Nigeria. From a pricing standpoint, to be honest, I might not be able to put a figure to it, but I think it's really going to be something solid, which I feel everyone should actually participate of. Chapel Hill Denham is going to be part of people that are going to be book running the transaction, and I believe that we would have some level of information when the time is right to be able to then share with the public also, around this conversation.
Right. I know book building, that's going on. Still going on at this point. All right, let's look at other parts now. You did talk about company size, being an important factor, for professional investors and what investors should be looking at, at this time. Talk to me about that and also the importance of free float. You did talk about 10% of the Dangote refinery being listed. I wonder how free that is. So two concepts, market capitalization, right, which typically speaks about size of a firm, and then the free float. So the philosophy, or our investment philosophy, is largely around the fact that not every company that is big is actually easily accessible to investors. It's good for a company to be big. I know about some stocks. That are listed, some company that's listed. Some people have been trying to sell that stock for a while. They've not been able to sell it.
They've not been able to?
Yes.
Absolutely.
It's so illiquid.
Because the free float is very small, right? So it's one thing for the company to be big. Speaking of corporate governance, it means that when the company is big, it's going to have good or strong corporate governance, access to funds, good capital, and all of that. Those things are good. But then what percentage of your capital is actually accessible to investors? That's where free float comes in. So free float actually speaks to the percentage of your shares, right, that is actually tradable, that is accessible, to the public, right? So it's very, very important, because a company can be big but not easily accessible, to investors. And free float is highly and strongly correlated to liquidity. If a company doesn't have a very high level of free float, then the liquidity of that stock is really going to be very, very low.
All right. Let's talk about diversification when it comes to investment philosophy. Do you think the Nigerian investor, do they have much options when it comes to diversification right now?
Absolutely. The market is not as deep as what we want it to be compared to some developed markets, but Nigeria is moving closer to that level based on a lot of things we are hearing. So I would say that investors have access to a lot of options. So for example, you have stocks that are in different sectors of the economy. I like to usually tell people that if you are going to buy a stock, you are not buying a stock because you like the stock. You are buying that stock because that stock or that company is contributing to the economic growth of the country, right? So you are typically buying the economic growth of Nigeria. So a lot of investors do not make investment decisions from that standpoint, which means that I'm focusing on the companies that are contributing to the GDP growth. And if I'm able to identify these companies, I do not have any stress. I just invest in these companies and I allow my money, work for me. So where people really get their fingers burnt or have issues around diversification is when they want to be highly speculative, right? Let me just put my money, let me move out, let me buy something, and then in 2 weeks I want to make money. That is good, but if you are really going to be a long-term player, right, in the Nigerian equity space, you must be ready to diversify, investing across different sectors: energy, consumer goods, the telcos, banking, insurance, just ensuring that you're able to diversify. Why? Because no company is actually immune to shocks. A company can be very good, but there is no company that is immune to shocks. And that is what we do at Chapel Udena Management. Regardless of how beautiful a company is, regardless of how much we trust that company, we have a stock limit. We are not going to go above this, regardless of how beautiful that company may be. Why? Because we do
even
not.
If it's a Dangote refinery.
Even if it's a Dangote refinery, we are not going to go above a certain limit, right? We are not going to chase returns, forgetting that the risk is actually part of that ride.
Right, and there's also the Paramount Fund.
Yeah.
How do these principles apply to such a fund?
Yeah, so in the Paramount Fund, what we basically do is that our investment philosophy, which then informs the strategy that we adopt in the fund, is around, number one, identifying companies that have considerable size, which in the popular language, high market cap or large cap stocks. But we do not stop there, because not every large cap stock is that market capitalization in the recent can be misleading. So we then take it a step further to then look at the free float of these companies. So which means that we focus on large liquid stocks, right? From that standpoint, we are then able to identify what is the valuation of these companies, right? Do we feel like they are currently undervalued, overvalued, right, or rightly valued? So from that standpoint, we're able to then do accurate portfolio construction, right, which then determines what we allocate, when we rebalance, and then how we're able to then generate optimal returns for our unit holders.
Do you take a look at technical analysis, looking for overbought or oversold regions?
Absolutely. Absolutely. So, I usually say that fundamental analysis will tell you the stocks to buy. Technical analysis will tell you when to buy, right? So we do a lot of that. The technical analysis, looking at what the technical indicators are saying, using quite a number of tools to actually.
And looking at the market right now, seeing how bullish the market has been so far, in 2026. In my mind, I'm seeing almost everything in overbought territory right now, and they've maintained that level
for a while.
And I just wonder what next, at this point.
So one key thing from a technical standpoint is momentum, right? The fact that momentum is slowing down does not mean that we are entering a bearish region, right? So what we are seeing currently is that momentum is slowing down, right? Which means that at that point, for people who are currently invested in the Paramount Fund equity, for example, one of the blessings, right, to you is that this fund is already highly invested in a lot of these stocks, right? We've already taken position in these stocks. So what we are currently doing is identifying comfortable regions from a price standpoint where we can then enter and buy, which means that our average cost is still relatively reasonable compared to people who are coming newly into the market. So you see that. So in a market like this, as much as you would love to probably go into the equities market and buy directly, the Paramount Fund, as a mutual fund, an equity mutual fund, gives you the access to these same stocks, right, at a cheaper price, because the average cost of the overall portfolio is lower, right? So I'm going to give you an example. Let's say, for example, I bought an Aradewa at maybe 400 naira or 500 naira. I'm holding XYZ unit. At some point, the price has gone up, and then it's coming down. If I buy more, the price might be absolutely high to you, but to the fund it is not, because it's going to average out. You see that? So at that point, it's safer to actually buy into the fund than go into the market to buy, because it's already bullish. I don't know if you understand. Right. So that's the approach, I think.
Some kind of hedge
yeah,
at this point.
Absolutely.
All right, I guess we've covered some ground. Today. Definitely now we need to go check out what's happening with Arsenal. Yeah. Thank you so much, Favor. I'm sharing your sat today with us. Thank you so much.
Thank you.
All right, and that's the show today. Thanks for watching this edition. That's the last one for the month of May, and we're looking towards June now. What will the market bring? Will it be bullish? We'll find out. Thanks for watching Capital Market. I'm Ladi Williams. Bye-bye.